Capital gains. Section 45 to Section 55 of Income Tax Act 1961 deals with capital gains. Capital gains is the fourth head of income. Let us now look at the meaning of various terms. First is basis of charge as per Section 45 subsection 1. Any profits or gains arising out of transfer of a capital asset during the previous year 2018 to 2019 is taxable under the head capital gains. Let us now look at the elements of capital gains. There are three elements of capital gains. They are number 1, capital asset, number 2, transfer of capital asset, and number 3, computation of capital gains. Meaning of the term capital asset as per section 2 subsection 14. Number 1. Any kind of property held by the assessee, whether connected with his business or not, is a capital asset. Number 2. Any securities held by a foreign institutional investor invested by following the regulations of Securities Exchange Board of India Act 1992 is also a capital asset. Number 3. The asset may be movable or immovable, tangible or intangible, fixed or floating. Examples of capital assets: land and building, plant and machinery, investment, shares, leasehold rights, goodwill, manufacturing license, tenancy rights, and rights to carry on a business or profession. And among these assets, leasehold rights, goodwill, manufacturing license, tenancy rights, and rights to carry on business or profession are termed as self-generated assets. Exceptions to capital asset. Capital asset does not include the following items. Number 1, commercial goods like stock in trade. Number 2, movable assets for personal use like refrigerator, television, laptop or other electrical appliances. Jewelry for personal use, archaeological collections, drawings, paintings, sculptures are considered as capital assets even though they have personal effect. Agricultural land in India is not considered as a capital asset, but the land should not be situated within the municipal limits or in a cantonment board having a population of 10,000 or more. Cantonment board is a civic administrative body which is functioning under the control of Ministry of Defence. The fourth item is gold bonds like 6.5% gold bonds, 1977 or 7% gold bonds, 1980 or National Defence gold bonds, or 1980 gold bonds issued by central government. The next one is special ballot bonds 1991. And the last one is gold deposit bonds issued under Gold Deposit Scheme 1999 or deposit certificate issued under Monetization Scheme of 2015. Types of capital assets. There are two types of capital assets. They are short-term capital assets and long-term capital assets. Any capital asset held by an assessee for not more than 36 months, that is up to 36 months, is immediately preceding the date of transfer is called short-term capital asset. Whereas regarding long-term capital asset, any capital asset held by an assessee for more than 36 months immediately preceding the date of transfer is called long-term capital asset. Next, let us look at the meaning for the term short-term capital gain. Any gain arising from the transfer of short-term capital asset is called short-term capital gain, and any gain arising out of transfer of long-term capital asset is called long-term capital
capital gain.
Descriptions regarding capital assets. Financial securities listed in a recognized stock exchange in India, or a unit of Unit Trust of India, or a unit of an equity-oriented fund or zero-coupon bond, the time period is up to 12 months instead of 36 months in case of short-term capital asset. In case of long-term assets for these financial securities, the time period must be taken as more than 12 months. Asset which is used for business or profession on which depreciation is allowed on written down value method is always treated as short-term capital asset. Third one is unlisted securities, and in case of land and building, land or building, the time period is up to 24 months in case of short-term capital assets. And for these securities, unlisted securities, land and building, it is more than 24 months in case of long-term assets. And regarding long-term assets, capital assets, in case of land and building, land or building or both, up to 31st March 2017, take it as 36 months. And after 1/4/2017, take it as 24 months. Transfer of capital asset, section 2, subsection 47. So transfer means sale of a capital asset, exchange of a capital asset, or relinquishment of the asset. So relinquishment means withdrawal of the right over the property by the owner is called relinquishment. Second one is extinguishment of any right over the property is also considered as transfer of capital asset. Third is compulsory acquisition under law. For example, compulsory acquisition of land by the government is also considered as transfer of capital asset. Next, asset converted by the owner into stock in trade is also regarded as transfer of capital asset. Next one is conversion of a business into a limited company bond, and any transaction which leads to transfer of immovable property are also considered as transfer of capital assets. Let us now look at the transactions that are not regarded as transfer as per section 47. First is any distribution of a capital asset on partition of a Hindu undivided family. Any transfer of capital asset under a gift or will or an irrevocable trust. Third one is any transfer of a capital asset by a company to a subsidiary company. Any transfer of a capital asset by a subsidiary company to its holding company. Any transfer by amalgamating company to amalgamated company. Any transfer of shares of an Indian company by a foreign company to another foreign company. This is in the nature of amalgamation of two foreign companies. The next one is conversion of bonds, debentures or debenture stock into shares or debentures. All these transactions are not regarded as transfer of capital asset.